So this is a preview for the Bank of England's decision. It's dubbed Super Thursday. Why is it called Super Thursday? It's because we have three events. We have the inflation report, which comes out only once every 3 months, only once per quarter. We have the decision itself, and this time they're expected to do something. And we have the meeting minutes from that decision. We also have a press conference by Mark Carney around the inflation report. So all these are planned events. What makes this Super Thursday even more super is that in the previous rate decision, the Bank of England told us that they are going to loosen monetary policy. They just need more information. Of course, the big trigger is Brexit. And June 23rd, the United Kingdom decided to leave the European Union. We had huge moves in markets. The pound fell, as you know, quite a bit. It's still 10% off the pre-Brexit levels. Bond yields fell quite a lot in the United Kingdom, despite, well, uncertainty. Stock markets plunged but recovered quite quickly. And we don't have a lot of hard information. We don't have too much retail sales, GDP, manufacturing data. We mostly have business confidence, consumer confidence figures. Nevertheless, in the last meeting on July 14th, the Bank of England told us it's too early to make a decision. They didn't have enough information. They wanted to get their own quarterly inflation report. And in the same week, let me remind you, we finally had a new, well, it came out quite quickly, we had a new government. So basically, Theresa May came into Downing Street one day before Mark Carney, before the Bank of England's rate decision. So I believe it also has to do with that. I believe there will be a significant coordination. But now they have more data. They had time to talk with the government. They had time to assess everything. So they did tell us that there's going to be loosening. Now, it wasn't that sure because another point here, Martin Wheel, a prominent member of the MPC, said a few weeks ago, he's not sure there's really a need for more easing. The Bank of England cannot do much. And that's true. Interest rates are already at 0.5%. QE is big enough and bond yields are very low. What else can the Bank of England do? We need more political certainty. We need perhaps more fiscal spending. But then came the PMIs, the special PMI report, and he said, okay. This changed my mind. It's a game changer. We need to do something. I believe that Wheel, which was a more hawkish member, if he turned dovish, that makes it certain that we'll have something. Okay, so now let's look at the options. Options are for a 25 basis point rate cut for from 50 basis points to 25 basis points. That's more or less priced in by markets. And another option is more QE. Some talk about an additional 50 billion pounds. Some talk about 75 billion. The program currently stands at 375 billion. Last changed in July 2012. The last time the rates were changed, that was back in March 2009. So it's over 7 years, okay? I believe that one move is priced in. So if we'll have QE instead of a rate cut, markets are expecting a rate cut, that is more or less expected. The pound will shoot up and down, but basically remain in the same place. Volatility, but without being a game changer. If we'll have two moves, if we'll have both a rate cut and more QE, that'll deal a big blow to the pound, and that'll mean that the pound could fall. Some expect it to fall towards 130 and even below. I'm not sure we'll have a fall under 130, especially from current levels around 133. But let's see. What else can the Bank of England do? The Bank of England can do more with its funding to lending scheme, FLS, more targeted loans. What's it's called in the sorry, in the Eurozone. It means conditional lendings to banks on the condition that they will lend to the real economy. They can buy corporate bonds. They can do other stuff. Basically, the Bank of England, which planned on raising rates actually before Brexit, at least last year, they have less tools to loosen policy. They have lots of tools to tighten policy. And in addition, it all depends on the government. So we have last input comes from services PMI today, the final figure. More input that we're not aware of, at least I'm not aware of, is the coordination with the government. So we might have a small move by the Bank of England, but a bigger move from the government. The previous Chancellor of the Exchequer, George Osborne, talked about, well, before the Brexit, to have another austerity budget. He was champion of austerity, and Philip Hammond said, no, well, the new Chancellor, it's not on the cards, so there might be big fiscal stimulus. If the government does a lot, the Bank of England does less. I believe we'll have one move, perhaps only more QE instead of instead of rate cut. And I think that's more or less priced in. If the Bank of England will surprise with no moves, the unreliable boyfriend, Mark Carney, then perhaps we'll have, shoot high in the, move up in the pound to 134.80 or above. And if we'll have two moves, I think we'll go towards 130, but not below. Okay. Question here. Why didn't they appoint Carney as England coach and Mourinho as head of the BoE? Would have been more credible. Yeah, could be more interesting. Maybe they should switch some jobs around to see. Maybe one guy is fit for the other job. Anyway, the Premier League begins soon, right? So it could be interesting. I'll be watching the rivalry between Pep Guardiola and Jose Mourinho. We're stars here in Barcelona and Madrid. Anyway, that's the Bank of England's preview. Remember,